To me, gold is a psychological commodity. It's not really an industrial commodity. There's plenty of gold producible, especially at these prices. So it's really a momentum trade. With sponsorship like John Paulson, it could go to 2,000.
All right, well, just another day in the office. Gold shot up to $1,200 bucks. I think it was up $20 today. The dollar continued to plunge, and stocks were hot as a pistol, up about 1.5% across the board. Joining us now, Allison Deans. She's former Chief Investment Officer, Neuberger Berman Private Asset Management, and Kevin Kerr, who serves as President and Chief Trading Officer at Kerr Trading International. Allison, Wilbur Ross is a brilliant man. I respect him enormously, but I think that's easy money creation, too many dollars created, zero interest rates, negative real interest rate. That's what's driving gold up. That's what's driving the dollar down. Now, my question to you is a very simple one. How long can stocks continue to rise in the face of this massive gold rally and dollar decline? How long does this model go? Which Wall Street has fallen in love with this model. How long can it last?
My sense is if the dollar plunges, it can't last very much longer. But if the dollar continues to just easily go down, the market can continue to do well. I happen to think that the dollar will plateau sometime early next year and start to strengthen.
If the Federal Reserve stops creating so many dollars and maybe tightens rates, is that implicit in your thought?
Yes, I think the Federal Reserve is going to stop its asset purchase program early next year. And what that will wind up doing is there'll be much more supply of longer-term debt coming on the markets, and long-term interest rates will start backing up, which should help the dollar.
Which should slam stocks? I want to be honest. I want to be very sober about this rally. Will that slam stocks? Charlie Plosser, the head of the Philadelphia Fed, said today he's the first Fed guy to say it is now time to raise rates sooner than people thought. What would the stock market impact be? Before we get to my friend Kevin Kerr.
I think if interest rates go up gradually and the yield curve, so the long end goes up but short rates stay relatively low, it shouldn't hurt the market very much. The market's cheap right now. We see profit improvement, and the earnings comparison is going to be very strong. So I think the market should hold in relatively well.
ISM manufacturing was very good. Growth is in place. Profits are in place. So you're an optimist on stocks?
Yes, I am.
Until
if we do see a plunging dollar, if we see the government spending even more money and we go into hyperinflation mode, but I don't think we're there now.
All right, so Kevin Kerr, $1,200 gold. Now, Kevin, I'm going to ask you, buddy, I keep saying this in the morning show. Nobody wants to hear this. The Consumer Price Index for the United States, the CPI, 3.6% at an annual rate over the last 3 months. Producer prices rising, import prices rising. The dollar continues to fall. Art Laffer calls it the exchange rate denominator. That's the problem, Kevin. Where is this going to lead?
Look, I don't think the Fed is going to be able to raise rates anytime soon. Most everybody has said that. Everybody is looking at the jobs. Look, jobs are falling apart. We are losing jobs hand over fist. The Fed cannot raise rates, and everybody knows it. The dollar is heading lower, and worldwide, countries are shifting out of the fiat currency, not just the dollar, but fiat currency in general, and shifting into gold, and that's what's pushing gold higher.
I mean, let me challenge you on that. Or do you want to challenge him on that? Go ahead. You take it.
First of all, everybody keeps looking at let's buy gold because the dollar is going lower. I think people are better served if they're worried about the dollar to own a basket of commodities. Gold is largely psychological, whereas we're seeing global growth and therefore demand for industrial commodities.
How about palladium? How about platinum?
I think people shouldn't just buy one. How about a basket? Agricultural commodity, industrial commodities, a basket of commodities.
I think you're both absolutely right. A basket of commodities is great with gold right on the top. Platinum in there, too.
But, Kevin, what about this? Look, you listen to Allison's optimistic. The economy, you saw those ISM numbers today, the fourth or fifth straight month. Kevin, what if the economy is stronger than people think? What if Friday's jobs report comes out zero, flat? In other words, not down 100 to 150,000 jobs, but actually flat, and we're getting ready for some job creation early in the new year, Kevin. Now, that changes the game. What's your take there? That would boost the dollar, would it not?
It may temporarily, Larry, but I don't think it's going to stem the decrease in the dollar because they simply cannot raise rates. Even if we see an uptick in jobs, a brief uptick, the longer-term trend, unfortunately for the dollar, is lower.
How high gold? How high gold, Kevin?
Well, look, China, we could wake up tomorrow. China could say, look, we're going to go from 2% in gold to 4%. And then you're looking at gold well over $2,000 an ounce.
All right, so you agree with Wilbur Ross. Allison, give you the last word. If the economy grows faster and stronger, in a sense, what's good for Main Street might not be good for the Wall Street stock market. Is that possible? I mean, has Wall Street liked the 10% unemployment rate and easy money from the Fed? And if that changes because of a better economy and higher inflation, what happens?
It could potentially. Higher inflation, better economy should bode well for equities. It could hurt the fixed income markets. And Wall Street makes a lot of money in fixed income markets. So I think it could put pressure on the bond market. I would be wary of having a lot of exposure to the longer term bonds out there.
They're going to get clobbered. They're going to get clobbered. What's your favorite investment right now?
I think people should invest in industrial commodities as well as emerging market equities.
Emerging markets. Dubai's off the board. Don't worry about Dubai.
Yes.
All right, good. Allison Deans, Kevin Kerr, thanks you very much to both of you. I don't know. There's a lot of complacency in the stock market, folks. I'm an optimist on the economy. I'm not an optimist about cheap money from the Fed.